All right, guys. So, what I want to go over today for this training tip is how we construct a longer term trade in the market where we see where we see a bigger move in the market rather than just a short term trade. Now, to identify these, there has to be quite a few components. They're not going to come around all the time, and you have to be patient. But certainly, at the end of 2019, I put my view forward that I see a very positive year on the FTSE. So, from a technical point of view, I'll just quickly show you on the charts that we have had a breakout. So this, you can see at the end of the last 2019, we were consolidating here. We got above 74.30. That was the breakout. So technically, that is bullish. So it's positive. We've got the Christmas rally up here. And then really we want to be buying the FTSE, but we don't want to be buying it up here. We want to be buying on a pullback. That's where the value is. The value isn't buying up here and chasing the hot money. The value is waiting for some sort of correction to come into the marketplace. Now, the correction is often instigated by the news. News often drives people in the wrong direction. It's better to separate yourself from the herd and do the complete opposite. So what we were looking for at the end of January, these are our reports on the FTSE that we send out every day, but towards the back end of January, we were basically saying that any move down towards 7,200 is going to set itself up for a nice buy for a multi-month rally to all-time highs. The reason for this is that, first of all, Brexit's priced in, so that decision to come out of the EU at the end of January was already priced into the market. So any sell-off on the back of that was likely to retrace. So that's the first thing. Also, there's been a lot of foreign investment which has been on the sidelines because of Brexit over the last few years. So the FTSE is undervalued compared to other global indices. So I'm expecting a multi-month rally on the FTSE coming up. I expect all-time highs on the FTSE. I think it's very undervalued when compared to other global indices. So we're looking for this move down to 7,200. The coronavirus also helped. That was another reason for the market to push down. But we've come into this nice range that we were hoping for. It came into the 7,300. Our clients, as I said, they were prepped for this well ahead of time. They were prepped at the end of before the end of January. So if we saw this move into the 7,300, 7,200 range, we were looking to buy, and that's exactly what happened. We've got the move towards 7,200 on the back of Brexit, all likely to retrace because Brexit's that decision's already priced into the market. The foreign investment the next day has then come in, and we're starting to see this big rally to the upside. Also, as I said, the coronavirus, I expect that's going to fizzle out shortly. I don't expect that to escalate, and I think again it's just an excuse for the markets to sell off. It's just putting people in the wrong direction. There's a lot of social media these days, and to some degree it's getting blown out of proportion. So where do we see the FTSE going? Well, on a weekly chart, we can see that the all-time highs at the moment are up here. So we're up towards the 7,900 levels, but I'm expecting to sort of go above 8,000. So that's really where we see this going. Probably first stop into the 7,700 level. But I will point out as well, though, that we have made this trade risk-free. So let's just go back to our trading reports. So that was the 29th of January. The 31st, again, just reiterating, this is before the Brexit, before we left the EU, looking for a nice buy in the 7,300 to 7,200 range over the next trading sessions. We're going to have our stop below 7,070, and we're going to target all-time highs. So we've got that move down there on the chart. Then on the 1st of February, we've already seen a nice buy-in, and we're now looking to take half profits. So we're going to make the trade risk-free. The next day, basically, we're 90 points in profit. So we're going to take half profits. So we're 90 points in profit, which means that if you bought, say for example, you bought at 7,300, and at this point in time, the market was trading at 7,390, you banked 90 points. So if you take half profits, you're locking in 90 points, and you can put your stop 90 points below your other half of the trade that you've left in the market, and therefore you have a risk-free trade. So you're using the first half of the trade to pay for a stop 90 points below the other half of the trade that you've left in the market. That's just good risk management, because although I have a view on this, it's always good to protect your capital and make your trade risk-free. So at the moment, we have a trade running risk-free. We can sit back, relax, and hopefully see this move up to all-time highs. It's nicely in profit today. Now, since then, it's trading up towards 7,488. So hopefully that gives you an insight into what we're looking at when we choose a trade. We're looking at a technical. We're looking at the technical charts. Then we're looking at key levels. We're looking at news as well to give us opportunities, and we're looking to take the opposite side of the retail market. So really, when they're all scared, that's the good time to be getting into the market. We call it when there's blood on the floor. That's when you want to be getting in the market. You don't want to be buying the market when things are looking really rosy, because then you're buying the highest price.